Hello and welcome to CFO.com. My name is Amol Deshe and my guest for the CFO Talks is Kunal Sanghavi, the CFO of HDFC Securities, the leading brokerage firm from India. Kunal, glad to have you.
Yeah, glad to be here as well. Thank you so much for inviting me for this talk.
Thank you, Kunal. So I have obviously lots of questions, but I will go slow and ask a very basic or maybe a soft questions to begin with, and try to learn from you in terms of how is your life as a CFO. So could you please tell us, how does your day start at office? I mean, do you look into the terminal? Do you look at the up and downs of the global markets and the foreign markets determine and decide your day? How do you start your day, Kunal?
So nowadays I start my day with the gym, and being into capital markets, the gym has to start at about 6:15. So, and you are right, things become a little interesting as the day progresses, because you directly start getting some updates on global markets and then news and everything. Uh, so definitely a lot of parameters that come in, but not necessarily that we are glued to terminal. Gone are those days wherein you want to look at terminal and decide your day. It's slowly become more strategic in nature, where you are thinking how to garner larger market share, what is the larger distribution, and what are the larger businesses you want to get in. So the day more progresses within important things to think on, important things to work on, maybe some reading as well around. And the initial part of the day also kind of focuses a little bit on some of the important things you want to get through, rather than as the day progresses more getting into meetings and then little bit of transactional aspects as well while you end your day.
Yeah, sure. So noted your points, Kunal. So only two suggestion is, if you're reading, please look at ETCFO very aggressively, diligently. We do a lot of content specifically for CFOs.
Yeah, surely.
That is one. And going to gym is, I'm sure, very, very important, because you need to be healthy, considering the regulators are become very active and you have to deal with, everything.
Correct.
So let me shoot my questions from there itself, Kunal. So considering the competition is very huge, and you said the new growth opportunities are very important. What I have observed in last maybe specifically 3 to 4 years is every fintech is getting into the wealth management business, and wealth management means for them is like giving tips and asking people to buy some stocks or creating a platform for that. Being a traditional institution, being a traditional brokerage firm, how do you see the gigantic growth with these mobile applications, mobile platforms? And do you see them as a competitor? How as a CFO do you look at this whole structure now?
Oh, fantastic question. I think so. The competition is just heating up, but let me tell you first, the competition is because the market size is big. And because there is a large opportunity, there are more players who are entering the ecosystem, which is leading to more and more competition that is coming in. So while we see competition coming in, if you look at the volumes are constantly growing. And the overall volumes in the market are growing at an unprecedented pace. The number of new demat accounts are growing at an unprecedented pace. It's just as if it sounds like yesterday, 3-4 years back, we had hardly 2 crore demat accounts in India. And today, as we speak, it's crossed 10 crore demat accounts in India. So it's like five-fold growth from what it was, which is phenomenal. And so what we are trying to say over here is, it's not only competition growing, it's there are more players coming in to cater to larger India, to also have a larger penetration, inclusiveness, and also to take equity to masses and classes all across. Secondly, we have to recognize this fact that the new age fintechs have been able to create a lot of mobile applications, seamless journeys, etc. And therefore, considering the innovations done by them and the new age opportunities that has come in, we have ourselves also come up with an additional brand named HDFC Sky, a completely parallel platform for millennials, completely positioning against this new age players, which is going to make sure that the larger India, the overall segment is also able to utilize services of HDFC. So a traditional broker with traditional experience, but completely in a new avatar, okay? Also parallelly, you will see, which will also cater to that particular segment as well, which is price sensitive millennials or derivatives, so to say.
Sure, noted your points, Kunal. But maybe I'm wrong, but my observations are the rally is very huge, no doubt about it. Number of people are hitting the capital market are large in numbers. But how many of them are actually active customers or investors? How many of them are actually looking at market on a long-term basis? Or is it a once in a blue moon they just open the account and they forgot it, because it could be also very difficult to find out of 10 crore how many people are actually investing on a daily basis. That is what I would like to learn. And adding to this, Kunal, considering the large number of people are coming to the market, is it really profitable for you, or how do you look at that proportion in terms of maybe a revenue or maybe margin call or something like that?
The second question is relatively easier to answer. More the customers, more the revenue, that goes without saying. More the customers, more the volumes also happens. With margins shrinking, the volumes grow much more exponentially, which takes relatively lesser revenues to go, but still revenues are growing in absolute terms. If you see, we ended March 21, FY21, at 80% growth over FY20, and we ended FY22 with 40% growth over FY21. So these are the kind of unprecedented growths. And it is not only us, even industry is by and large on similar footing that it is growing in this particular pace. So that kinds of says that yes, this is becoming a high volume industry and there is much bigger market potential to grab, which is happening as we see it and as we speak. Again, coming to the fact that when you talk of DAO and MAO, what we call it daily average users and monthly average users, which is a matrices that we track, you will see that by and large 40% customers, 40 to 50% customers trade on a monthly basis, which are active across the whole year. And of those 40, 50%, there are 20 to 30% customers who trade on a daily basis. And it can be rotating, but that is the kind of statistics that we see. At the same time, if you see whether it's daily customers trading, are they profitable, and long-term investing, is it really working? Obviously, if you will understand that the equity investors are much, much larger in numbers than only traders, so to say. And then that demonstrates that investment is definitely working for sure. And then that kind of gives a peaceful sleep tonight to people than only trading per se. Right. But and then that demonstrates that people do also come for long-term investing and profiting over a period of time rather than an intraday profiting for that.
But there is no specific data in terms of how many people are being investing continuously or doing their investments or active accounts out of this 10 crores now.
So National Stock Exchange publishes the data, and that is what the whole industry looks at in terms of active customer, which is an active customers on a yearly rolling basis. So that is something that we all also track, wherein we know the registered customers are kind of gone to about 10 crores in terms of demat accounts. Okay. But deduplicating them and seeing at a daily active customers across all broking houses, you may see about 3.3 crore customers that come on a overall basis as we speak. The active customers of this particular statistics have grown exponentially over a period of last 2.5 years, as you may have known, because also of the new customers coming in the ecosystem. However, if you see, this number is also growing on a monthly basis. However, there has been a little bit of a taper after COVID in terms of last year, which is now again getting back to shape in terms of after the recessionary worries and hiking of interest rate and all of that is kind of behind us, so to say, for the time being. And markets are getting back on shape.
So sure, I think markets are kind of achieving new sky almost every day. Obviously, there are some downfalls here and there, but I think maybe there are various reasons, right? The economic frequency indicators are showing a strong growth. But as the new customers are coming up into the market, and the regulator has, been very strong. So what I would like to learn from you is, considering the compliance has been increased by regulator in last couple of months and specifically year, how are you dealing with it, and how are you actually translating those compliance into your company?
Very good question, I would say, Amol, because This is something which is at the tip, and regulator has been very, very proactive in terms of the measures they are taking. The agility and speed demonstrated by the regulator in terms of implementing these reforms, new age technology, new processes and systems has been commendable. And to be very honest with you, is an inspiration for us also, with the way in which if a regulator can do so well, why we as companies cannot do it so well. And then that's inspiration we take and we try to take it forward. Like as we speak, that is something we need to implement. How do we cope up with it is something very interesting that you will understand. There are two important things. A, it calls for system changes, and B, it changes the business model to a certain extent as well. And then we need to factor in this. Now, the only thing that turns in our favor with this kind of changes is, for us, it's giving much larger amount of level playing field. Like if other broking houses may have been giving larger leverage to the customers than probably what would have been right, or maybe they are not paying out timely but keeping the money, then regulator came up with monthly settlement, quarterly settlement. Like we do all the payouts on T+1, T+2 basis immediately to the customers. So we find that a lot of these practices we have been doing very well. However, the others were not doing, which put us into some kind of a competitive disadvantage. But with this regulatory actions, it's actually giving us a competitive advantage and level playing field wherein everybody will be at par and they will not be able to differentiate in terms of offering by giving this flexibility to the customers, and we all will be in the same best practices, so to say. So we are lapping up with a lot of happiness, so to say, because it will eventually add up to our customer base as well.
Sure. I mean, one way, if a regulator asks you something, you have to just close your eyes and follow it. That's a basic practice, no doubt about it. But given the fact that the compliance burden, or maybe a compliance, day by day, the new notifications coming up, regulations are coming up, has your cost for compliance gone up?
So cost of compliance definitely goes up because there are a lot of things that comes which calls for various system, people, implementations, larger resources requirement. There are certain things which calls for larger fund requirement. So working capital also goes up, so to say. So there are certain things which leaves some of the income back to exchanges and clearing corporation. So it is true across all the broking houses. However, we also believe that in the long run, it will all even out and there will be better ways to monetize with much more healthier and conducive environment. And that is how we see it. But I would definitely say the cost to compliance, if you ask me a very blatant question, definitely has gone up much.
Well, sure, I can understand that. So, in a very competitive environment, Kunal, at one side your number of customers are increasing. At one side, your compliance cost is also going up. On the other side, I'm sure the real estate, the operations, the talent, the skill, and every cost is going up. How, being a CFO, are you actually managing your profitability? Because you cannot, maybe cut costs specifically investing on infrastructure or technology, or also hiring new talent or something like that. Is that a big challenge for you as a CFO?
No, there is a constant change in business model, and you need to go on factoring it in the pricing and your offerings that are there. At the same time, you need to estimate your business volume, number of customers, and the funds requirement well, so that you are appropriately able to plan and take those kind of bets, so to say. There are other areas where you also use technology in a much more better way to optimize the various kinds of costs. So I would say it's a constant work with respect to high growth, which is yielding higher revenue, getting offsetted by certain amount of new costs that are coming. At the same time, constant optimization of various costs. And it's a mix of those things. And I would say on a year-on-year basis, if you see that new cost which calls for because of new things is by and large similar. So if you have factored in well within your budgets, you are able to manage it very well from that perspective.
Not specifically about, in general, about city regulations, which we partly discussed that there are new things coming. But in general, in CFO's life, I see a lot of new risks or new compliance has been added. Uh, I mean, IFRS was there. Now new taxation reforms are happening. The GST came, and now everybody's talking about ESG. You have to also count the carbon footprints, which a lot of global companies have already started doing, right? So how do you deal with this? How difficult it is for you to actually look at and tick mark all the compliances which are going to get added every day?
ESG is something that is on the top of cards for all the boards, then it comes back to us to kind of manage. You are right. And I will tell you the best way to do all of these things is to not take it as a tick mark exercise. When you don't take it as a tick mark exercise, you kind of embrace it more also from the perspective why your business needs this, why you need to do it. And you also try to constructively inquire within the business. Like as you rightly said, ESG, we are trying to look at a lot of every employee inclusiveness within the good work that we are doing out of our organization, be it from feeding the malnutrition to the children or getting the education or providing hospitals, cancer patients, etc. Those kind of things. And when our employee are getting involved into it, it's linking back to the so-called purpose in life and purpose at work. And these two are very important thing, and it's helping us to kind of uh, get into how employee retention, affiliation with the organization, it's impacting their productivity, it's impacting their family. Now, when you look at things so constructively, it just does not remain a tick mark exercise. However, if you also see from changes that are regulatory, as I told you earlier, again, if we see it as a tick mark exercise, we just need to make sure we comply. But if you see it as a business model change, business pricing change with respect to how customers are benefited, and then you implement it, then you connect back to the whole cycle, right? Starting from your ground level employee to your top level employees, to your partners, vendors, and most importantly, your customers and stakeholders. So when you connect across the whole cycle, it's a very, very embracing journey, I would say. And any change management becomes so welcome thing that you actually don't want to do any mundane task going forward.
Well, sure. Noted your points, Kunal, and I quite agree with you. So one more question, which is kind of every company I understand is struggling these days, or they talk about it, is a talent. Everybody's talking about a talent crunch. On the other side, we speak about the employment data, where the new jobs are not being created. So what is your view here? What is the current scenario as a CFO do you see on the talent side? Has the budget specifically gone up to hire, the specific talent? Because considering the growth in data, AI, machine learning, we need a specific talents, right? We need a people who are not just financial analysts, but engineers. That's where the training in the financial institutions are. So are you increasing your budget specifically for this part? And in general, what is your view specifically on the talent demand in the industry?
So Amol, somewhere on this, we are on the sweet spot, I would say, wherein it goes without saying that we have to increase our budget on this count. Also for the reason that we are having larger amount of people that are getting added into this particular thing. However, what is also important to note on this is that when there are larger people and when there are larger revenues that are coming in, it gets absorbed within that particular cycle itself. And because we are into a high growth, we are into a sweet spot. So you don't necessarily feel as larger the impact. But to answer you, yes, there are niche talent. Niche talent is in crisis. We need to increase our budget to hire niche talent, but you need to see it as an investment. You can't necessarily see it as a higher cost, etc. But at the same time, you are getting a resource, and every additional resource costs. And then you need to factor in that additional resource, additional cost will give additional serviceability and features and offering to your customers. You need to make sure the whole cycle really turns into product offerings and monetization and path to profitability very well, which we make sure we do it.
Sure. So maybe one or two more last questions, Kunal. So
sure.
One is specifically on the being a CFO of a brokerage firm. Again, you come with a very experienced background. You have dealt with brokerage firms in your past experience as well. But in the digital age specifically, or in general, what are the major challenges being a CFO of a brokerage firm?
Basically, one needs to really look at challenges from the perspective of a long-term growth. So the market cycles that are there, the macroeconomic events that are there, does impact market, does impact customers, does impact risks, and therefore also creates a much more volatile market cycle vis-a-vis other businesses, what I believe. It's not necessarily as simpler and steady. If you per se ask me to be of a brokerage firm or a capital market firm, because then it's way more contextual in terms of your customer behavior, your customer activity, everything is linked to market movement, which is by and large beyond your control, so to say. We have been lucky in India that we are in a growth phase. We are an emerging market. Our GDP is increasing. Our market cap is increasing. Our government is relatively stable for close to a decade, I would say 9 years or so. So that helps in terms of actually seeing way more positivity and growth, and also kind of give visibility during downturn times. Like we had a lot of recessionary global macroeconomic factors last year, which created a lot of cloud around a lot of things in stock markets, how it will behave. However, India was kind of, I would say, fairly decoupled to a large extent, and we had clear visibility in terms of how the growth is going to come back again, and now we are started to see it. So those kind of things really help us to chart out well, but that really makes our work really much more larger in terms of studying the overall thing and really putting across how we as an organization in the short term and long term will phase out. How do we build our projections, expense outlay, expansion plans, technology investments, innovations, R&D, and everything.
Noted. I thought the biggest challenge, perhaps you will say, is people must be calling you Prem from your friend circles, asking you which is the next multi-bagger and can you give us some tips? Being working in a brokerage firm.
That is not a challenge. That is a legitimate question that a brokerage firm would want to answer. And we have the whole research wing, unlike a lot of other broking houses who are only focused on execution platform, which on a daily basis kinds of give a lot of research ideas to make sure that customer is well guided. It's not left helter-skelter just by being a customer, and they know where to go, when to invest, where to invest, to time it well. What are the fundamental parameters, technical parameters, so to say. And then now all of that is also available in our mobile platforms as well, which makes access very much ease for the customers. So that's a welcome thing. It's never a challenge, I would say.
Sure. Those are your points. I'm sure now the friends will directly call you and ask you for multi-bagger tips for sure after watching. Yeah. Let me shoot one more question here, and a very important one, given the fact that the world is heading towards a 5.5-inch screen from the old 17-inch desktop, must say, and even annual reports or DRHP has been compressed into the the smartphones. The world is absolutely getting into the mobile savvy. How do you see CFO's role changing? What is your outlook on the changing or the evolving role of CFOs? What are the things that you think will change maybe on a CFO's dashboard going ahead, Kunal?
Yeah, I think so. The role is, let me try and give you a transition from the very old period wherein it was more focused towards accounting and at best managing the finances, etc., and making sure the banking is very much done. Over the years, as we progressed, it also kind of turned out to be way more into a controllership kind of a role, wherein trying to do. And then now from there, it's becoming way more strategic in terms of phasing the various business plan for the organizations, looking at M&As, looking a lot at technology, which technology, how to gain a competitive advantage out of technology, how to manage cost out of technology, a lot of technology replacements, drive optimized cost, etc. So that kinds of completely shoots you into the center of the business, wherein you need to leverage AI analytics and these kind of things to essentially try and constantly upgrading the business model. And if you see over the years, it's kind of changed to a large extent, wherein technology is constantly delivering what human today is doing doing tomorrow technology is doing, but human is also doing something else. It's not replacing, and human is leveraging, it's adding. And then this transition whole, you have to constantly imbibe in the business model. And that's what kind of gets pioneered in the business modus operandi by the CFOs.
Noted your points, Kunal. I think that was a good one. Thanks for sharing those meaningful thoughts here. And thanks for your time. It was really nice listening to you. And thank you so much, ladies and gentlemen, for watching CFO Talks at utcfo.com. Thank you so much.